So Heather, do check out our newly rolled out SAP FICO course where we have covered end-to-end training of finance and controlling module. So behind making of this course, our main objective was to make our student understand the why behind every step or every configuration that we do in the system. So keeping that in mind, each of our lecture curated in order to make the student understand why we do certain steps in the system and what impact it makes on the end side of the SAP. So if you are interested in the course or opting out for the course, you can check out our website erbcollege.co. If you go on the website, you can go into the section SAP FICO course where you can opt for each and individual module separately, or you can even opt for the entire SAP FICO training as well. Inside, you will see the detailed description of the course of the each module, and if you want to check out the course contents, you can just click here and download the content menu. It is total of 35 hours plus downloadable content, 35 lectures, and videos are accessible to download from the any of the device, right? So few of the descriptions you can check in here. If you are interested in opting out for any specific module, you can go ahead and purchase that module course. You will be able to download a PDF where you can access all of the training material and videos.
So today we will see the depreciation key, like how we can configure the depreciation key, what is the use of depreciation key, and what are the steps to do it, and where we can assign and how it will function once we assign it to the asset master. And the depreciation key contains the value settings which are necessary for determining depreciation amount, right? So depreciation key is nothing but a key like which will have the formula to calculate depreciation or to determine the amount of depreciation, right? It contains rules of calculation for automatically deriving depreciation value, right? SAP will provide standard depreciation keys that can be used as a reference to create a new key if required, right? So there will be a certain depreciation keys that SAP would provide by default. There will be available in the system, and if required to create a new key, we can always use the existing key to copy and create our new key by changing some of the formulas that we want to change. Now we will once this is clear, we will go and see how we can configure the depreciation key. Okay. So now we will actually go into the system and configure our depreciation key. I'll go to SPRO, CP reference IMG, financial accounting new, your asset accounting. In asset accounting, we will go to depreciation, ordinary depreciation, valuation methods, and here we have called depreciation key. And in depreciation key folder, we have the calculation methods. Okay, so these are the main like types or methods of calculating a depreciation. Okay, so not calculating a depreciation, but in order to create one depreciation key, these are the steps that we need to perform, or these are the different steps wherein we can maintain different rules, and then we can perform the depreciation on it. Okay, so before configuring this, let's have a look at one depreciation key, how the depreciation key looks like and what is it. So this node called the okay, we'll cancel this one. This node called maintain depreciation key. Here we will assemble all of these steps that we have configured. So we will execute it. We will give our chart of depreciation, which should be RH01. Right. So these are different depreciation keys that are available in the system. Okay. Now if you go down, so this one LINR is one very common depreciation key, which is there for the straight line method. Okay, straight line from remaining useful life. Then there are for WDV also there is one standard method, one standard depreciation key, that is something like LINR only, but let's see. So these are what like depreciation keys. Okay, so this LINR is one of the depreciation keys which says straight line method remaining useful life book value to 0. Okay, so when we will select this method and when we will select assignment of calculation, okay, here, so just double click on this line, right? So here we can see this key was configured with the help of this different transactions. Okay, different methods. Okay, so in this key we have assigned base method as 0011, which is saying ordinary percentage from useful life. Then we have assigned like in declining balance we have assigned 001, which is like basically 0000 means we are not using this formula. And then period control we have said like something like this. We will say what is it mean. And in multi-level means 001 percentage we have said 00%. Why we have said 00% is because we are calculating the percentage from useful life. Okay, so how this will happen, that also we will see. Then we are saying straight line method and some of the other things that like multiple shift and all, this will not be that much useful. So this is how one depreciation key will be formulated. Okay, so now what we will do, once we'll go here. So depreciation from useful life, when they say depreciation from useful life, what does it mean? Like each asset will have one useful life. Each asset will carry one useful life. Okay, so let's say we have one asset called furniture, and in furniture we have bought it for 10 lakh, right? And the useful life of this furniture is 10 years. Okay, it's 10 years. So now useful life is 10 years means after 10 years there will be a zero value in of this asset. After 10 years it will no more be valid or no more be useful. So when we will say the calculate the depreciation value from the useful life, what system will do? System will just take the APC cost and divide it by the useful life. Um, Okay, so basically it will formula this semicolon is under numeric values, I'm not sure, but it will system will just take this value divided by 10 years. It will come like we should depreciate it every year by 1 lakh. If we depreciate it every year by 1 lakh, this asset will become zero after 10 years, right? Similarly, if I say useful life it 8 years, system will just divide this value by 8 years and some 1 lakh 20,000 or some amount will come up, and then system will divide it, this system will depreciate it by that much amount every year, right? So this is one thing which is called as like calculate the depreciation from the remaining from the useful life. Okay, if you don't want to go by useful life, like this is also very famous option, and like in a lot of companies, in a lot of assets, I have seen depreciation being calculated from the useful life. Okay, then if you want to go by percentage, then your system will not consider the useful life thing, and system will just consider the whatever percentage you will maintain. If you maintain 5%, system will just keep depreciating the asset by 5% every year. Okay, it doesn't matter after useful life there is some value or not, or whether asset is fully depreciated or not, that doesn't matter. System will just keep depreciating it by 5%, whether it is by straight line method or WDV method, that we will see. Okay, so in order to configure any depreciation key, we have to configure these steps. Okay, so first we have to configure like define base method, multi-level method, period control, declining balance, maximum amount. So when we will configure all of these steps, or when we will maintain all of these steps, then finally we can go and create our own depreciation key, wherein we can maintain the details that we want to select. Okay, that we have configured in these steps. So we will go into define base method. Right. Here also we will have the predefined like system provided or SAP provided methods that we can see, and we can uh, use those methods. Like here we can see 0011 is saying ordinary percentage from useful life, and then 0022 is like explicit percentage, means it will not uh, it will not take the values from the useful life, but it will go as per the percentage, explicit percentage. So we will just first double click on this to check how it is maintained. So ordinary depreciation stated percentage, and these are known. So we'll just select this line and copy it. And we say this is our own RH01 name, we will give it to it. This ordinary depreciation, special tax, interest, these things will never be used, but that are there. And when you will scroll, see this, here we have various numbers of options. Okay, so these all options is like used when for the production planning or for plant maintenance kind of modules will be requiring these options to, when asset will be working in shifts and all. so that we like never have to go through those options except someone from plant maintenance or someone comes in. But right now what is majorly being used for from your FICO point of view is like percentage from useful life or stated percentage, what we want, right? So we will select stated percentage in our case. Just press enter, ignore the warning message, and then we will save this key. So what we are doing, we will write this down. Okay. So in what step, what things we are defining, we need to be knowing that. So in base method step, what we said, like it stated percentage, right? So from this step, system will know that our depreciation key wants to have a explicit percentage and it should not be calculated from the useful life, but we will maintain our own percentage, right? So this is what we maintain at this level. Okay. Then we'll come out of this level. Oh, financial accounting new. Right. Then this declining balance method, right? Okay. So how this declining balance method will work? This is something that is like very rarely or almost never been used. Okay, so this declining balance method says like it is used for cases where business want to charge higher depreciation at the start of useful life and then reduce the percentage at the end of useful life. Okay, means when we will buy the asset, okay, when we will buy the asset at the start, so let's say we bought the asset for 10 lakh. So at the starting years, let's say this is like 10 years of depreciation we are going to calculate. So at the starting year, we will calculate the depreciation, we will charge the depreciation with the higher rate. Let's say for starting 3 years, we will charge the depreciation for maybe 15% or something. Then remaining, then other 3 years, we will charge 10%. Then last 4 years, we will charge only 5%, right? So if likewise we want to charge, like at the start of the depreciating years, we want to charge a higher depreciation and then reduce the percentage at the end of the useful life. In those cases, we will be using the declining balance method. Okay. So declining balance means like declining the balance of depreciation or declining the value of depreciation. Right. So in this case, like we'll say we are not using it. Okay. So when we say we are not using it, what we will do, we will use this 001 key because 001 key is saying 0000, right? That means we don't want to use this key. Then we have something called maximum amount method. Okay. Now again, this maximum amount method is also very rarely used. Nobody has converted anything. Okay, this thing. Close this. So okay, I'll go back here. Again, maximum amount method. Here we can enter the maximum amount up to which depreciation should be calculated. Okay, this is again like not useful thing. Maximum amount method. Okay, so what happens in some cases or in some countries, due to like some government rules or regulations, business might come and ask that on this asset my depreciation amount should not exceed by 2 lakh. Okay, like up to 2 lakh only depreciation should be posted on this asset, or up to 3 lakh only, or up to 50,000 only, 30,000 only, anything like this. So business will come and might ask you to do, we just want this asset to be posted on this level. So this is also again very rare, will happen very rarely, or very rarely business will come and ask. But if they do so, then we have to configure this maximum amount method. Like we have to go into this maximum amount method, and we have to state the percentage, state the amount up to which the depreciation should be calculated. Okay. So here this validity, like valid to calendar date, also we can mention like up to this date only this much amount of maximum depreciation should happen. Right. So like this we can maintain here. Like I can, I can just, okay, just show you. I can just click on new entries, and here I can say like RS1, and we say max amount for RS01, right? And then I will select this. I will go into maximum amount, click enter, validity date. I can do like triple. Okay. Right. So if I give it like this, which means like it will be valid for all the up to like end of the years. Like it will always be valid. And I can say if in INR currency 30,000, 3,000, 30,000. Okay. I'll just enter this. I'll just save it. Right. So what I did, I just created this one key called as RH01, and I just enter some maximum amount to this key. Now when I will assign this key to my depreciation key in my depreciation key, and if I assign the depreciation key to this asset, then if I said 5% depreciate this asset, system will keep depreciating it until I reach the maximum amount limit, which is 30,000. Once I reach the 30,000, after that system will stop calculating depreciation and posting it. Okay. This will happen automatically. So this is the use of max amount key. But again, I have never seen a scenario where someone is coming and asking to use this key. It just SAP has provided these features for some rare cases or rare rules, if that is there. So right now we will say not using it, but we can also use it also, right? So this is one thing, maximum amount method. Then we have here in multi-level method, it's like we cannot go by the name, but here actually we will be defining whether our uh, but depreciation key is going to be a straight line method or WDV method, or what percentage it should select or calculate, right? So multi-level method is actually a useful, is actually an important steps to do. Here we will select whether our depreciation calculation is straight line method or WDV method. And here we will also state the percentage of depreciation. Okay. Right. On this step, or on this step, we will be deciding these two things. So we'll just 1 second. Right. We'll just go into the define multi-level method. Here, what we will do, we'll click on new entry. We'll select like RS1, and we'll just give it like RS01. So like when depreciation should start posting, so we will say from ordinary depreciation start date, this date we will be maintaining in asset master. So we'll see about this also. Once we maintain the name of it and description of it, we'll go into this levels folder. Here we will click on new entries. Here we have to say acquisition year and the useful life year. Okay. So now we will not, of course, we will not give it by 2023 and 24, because then every year you have to come back here and maintain it. Instead of that, we will just give 9999, which means it is applicable for all the years. And in useful life column, we will say 999 years, means any asset will not have longer than more than this much years of useful life. So we are giving it at its max. So no asset will go out of our rules range, right? In period column, this third section is a period. Here we will say we will have a like total 12 periods for all the depreciation calculation, which is 12 periods is nothing but 12 months. And then now this column, we will select the base value. Okay. So what value we will enter in this column or in this field will decide whether our depreciation key is being used as straight line method or WDV method, right? So if I do F4 here, if I see the search help, I can see the base values options is like acquisition value, or I have the option called net book value. Okay. So mainly we will need only these two things. One, either select acquisition value or select as net book value, right? Again, we so how this will impact a straight line or this is we discussed here, right? If straight line method is something which will calculate the depreciation on APC value, right? So here baseline value is APC cost, means whatever cost I am acquiring my asset. If my acquisition cost is 10 lakh, then every year the depreciation will be calculated using the base value of 10 lakh, right? If I select here my base value as acquisition value, but if I select my base value as netbook value, then system will go and check what is the cost as on date, as on year, and only on that cost, system will calculate the 5%, 10%, whatever it is, right? So now we will go for straight line method and we will select acquisition value. So on the acquisition value, we are going to charge the depreciation. Now, how many percentage we want to charge, right? Let's say we will say 10%. Okay. So now we are mentioning the percentage and we will not tick this remaining useful life box. Okay. Even in our base method, we have said that our depreciation key is going to be stated percentage. We are not going to calculate from the remaining useful life. So we will just we will not select the remaining useful and we will enter the percentage, right? Once you enter it, you will just press enter and save this. Okay, now we have to come out of this screen. Okay, so define multi-levels we have maintained, and this is actually an important step where we will be deciding our depreciation key, how our depreciation key is going to be performed, either as a straight line method or WDV method, and what percentage of depreciation we are going to calculate. Now, after this, there is one more important step which we have to maintain, which is period control. Okay. Now, what is this period control method? We'll just see. We'll just execute this. And here we can see there are some standard things are there, okay, like 001, 002. And here we have the fields called acquisition, addition, retirement, and transfer, okay. So what is it? We will just select this acquisition field 01 and F for it. Just move it away. So 01 is saying pro rata at period start, okay. Then we have 03 called pro rata at mid period, okay, at mid year, or we have something called 11 as next month, okay. So what is this field means is that, okay, it's all about how depreciation should be calculated, okay. Let's say we bought this asset furniture on 16th April 2023, okay. We bought furniture asset of 10 lakh on 16 April 2023. Now, since we are buying it on 16th April, so while calculating the depreciation, how system should start calculating it, right? System should consider the April entire month while calculating the depreciation, or system should skip the April month and calculate it from May month, right? So how system should behave in case of acquisition of the asset for calculation of depreciation. That is what we are defining in the period control method of this thing. So in the acquisition column, we are saying 01, which is pro rata at period start. What does this means? Like it should calculate in the prorated way at the start of the period, from the start of the period. Okay. So right here we are saying 1604 means it should go into the May month, because we are saying as per prorated, right? So if it is before 15th, it will go from the 1st of April. It will calculate the depreciation from 1st of April. If it is going beyond 15, it will calculate from the next month onward. Or there are some settings where we will directly calculate from the next month, right? Or directly calculate from the next quarter, right? Or calculate from the mid year if value is in between, right? So similarly, if there is this asset is already, we procured this asset 10 lakh, and on top of this 10 lakh in the mid year we added 1 lakh of extra asset, right? So how system should calculate depreciation on addition, that also we are saying here in addition column. In addition also we are saying as per prorated. Then what if we retire the asset? We, let's say out of this 11 lakh, we retire 5 lakh, right? Then on this retirement, how a system should calculate the depreciation of those retirement? If it is getting retired in the mid of the month, whether that entire month should be calculated for the depreciation, or since it is getting retired, should we skip that month, right? Or if the asset is transferred from one company code to another company code, how system should calculate it, right? So these all period controls, we have a different option to select, and we can select and calculate our depreciation accordingly. So business will let us know like how they want to calculate their depreciation. Business might sometime come and say like, we don't want this to be work in this way. If asset is getting procured in the mid of the month, it should be started depreciating from the next year itself, or from the next month itself, next quarter itself, right? So now, if you want to understand what is the meaning of each and every thing that is there, we can use the help of this documentation. Okay, right, left side to the execution key, we will have this documentation symbol. If we click it, we will see the entire documentation maintain. Okay, maintain the period control. Can specify that the depreciation start date for all acquisition year. It's not that clear. Right? Maintain period control methods. I think in period control. Right here they have given like pro rata at the start of the period. What does this mean? The depreciation start or end date is always set to the beginning of period in which the asset value date for the acquisition or retirement lies. So pro rata at the start of the period means it will always consider at the start of the period, and no matter where in the middle of the month you are buying the asset or retiring the asset. So pro rata at the start of the period up to the middle of the period. So the depreciation start or end date is set to the beginning of the transaction in the half of the period. So just like we saw, right? This is how it will work, right? Pro rata at the, what is this, pro rata at the period at the middle of the period, right? This will work like this. If you are buying before 15th, means before half of the month, it will go and calculate depreciation from start. If you are buying after half month, it will calculate from the next month, right? So likewise, whatever is the requirement, or whatever, however we want it to be calculated, we can go and maintain it in the period control method, right? So in period control method, we will maintain the uh, logic for depreciation start date. So from which date we should start depreciating our asset, right? So once we maintained all these steps as per our requirement, so if someone come and say use this maximum life method also, then we will maintain the maximum amount up to which depreciate assets will be depreciated. If someone ask and say like, we don't want this percentage to be constant always, we want it to be in declining way, we can use this thing. But these two things we never have to use. But this rest, other than these two, all of these are like uh, must in order to form a depreciation key. Okay, so now since we have maintained all of these things, now we can go and say maintain depreciation key, right? Here some of the standard depreciation keys I have provided. Let's take a look at it, how it is. We'll just select one of it. We'll just copy it. So whenever you are creating new, it's better to copy, since there are like a lot of fields and we are not aware of all the fields. So we'll say this is our RH01 depreciation key. So depreciation key or RH01, right? So maximum amount and these things we are not using. Then there is one here, period control according to fiscal year. So we will select this, which means whatever fiscal year like April to March, or Jan to December, or whatever fiscal year we have maintained in our company code. So this depreciation key should refer to that fiscal year, and according to that calculate the depreciation. Okay. Then depreciation to the day means, what does it mean? Is like, let's say we have this asset procured and we are selling this asset on 17th of May 2025. Then when we will say depreciation to the day, means system will consider this 17 days also of that period, and consider the depreciation for this 17 days also. Okay. So it is also totally based on whether user need it or not. So mostly it will not be required, because we'll calculate the depreciation either for that entire month or for the month before that. So okay, then we will press enter. So entries are copied. Let's press enter. This RS01, we will select it and we will go into the assignment of calculation methods, right? And now here we will start assigning the things that we have configured, right? So base method, in base method, I think we have configured our own method. Right, RH01. So we'll select our own method, which is explicit percentage. Then in declining balance, we said we don't want to use declining balance, so we'll use 001. And in period control, we will use 001. 001 was like prorated for all the 4 scenarios. So we will use that prorated. And then in multi-level method, we have defined our RS1, which says that this is going to be straight line method with 10% of depreciation, right? I will press enter and 1 second, what happened? Zero one zero zero one. Press enter. Here we will have to say it is our straight line depreciation. Right. And this changeover method and all like multiple shift is again something that will be used when along with the PM or PP module. That is not in our scope. So we'll just save this configuration now. Now what we did, we have created RS01 as our chart of RS01 as our depreciation key. And in that key, we have said like we have assigned base method, period control, and multi-level. All these calculations we have assigned. And as per all this calculation, how our depreciation key should work is that it should charge 10% of depreciation as per the straight line method and considering the period control formula that we have entered, right? So as per these all things, this is how our depreciation key should work. So we'll just test that out. All right. So it will depend on the business, like how they want to calculate. So I think it is in like how this depreciation should be calculated, whether it should be calculated by straight line method or written down value method, is like mostly be influenced by the rules and regulations of governments. Okay, so as per Companies Act, how Companies Act states to be furniture should be depreciated, right? So based on that, this company secretaries or CS will be taking decisions how they want to depreciate. So whatever they will say, we will just configure the key as per the requirement, right? So we just need to know what and all the options are available in the system. So if someone comes to us and say like we want this kind of things to be done in the system, we should be able to do it, right? So once this key is saved, we need to activate this key. Okay, this is already in active state because we copied from other one. But if you create from scratch, it will be in inactive state. And if it is in inactive, you have to just press on this activate key, then it will be activated, right? So our depreciation key is ready now. RH01 is one key that we have configured. Likewise, we can configure n number of keys. RH01 is a key which just says 10%, right? There could be, you have to create for 15%, 20%, 22%, 10%, 5%. So all for these different percentage, you will need a different depreciation key. So that all those we need to configure. We have to configure separate for straight line method, separate for WDV method. So a lot of depreciation keys will be required by the business. Okay. So when newly implementing SAP, we have to consider all these scenarios and we have to configure that many depreciation keys in the system. But once it is configured, we don't have to like come and create new or change it. Okay. So depreciation key is now configured. We'll just go back into our main screen, easy access screen, and we will go to our accounting financial accounting, fixed assets, and in asset we will say, okay, let's create new only. We'll create new asset, and in new asset we have to give the asset class. So yesterday we RH01L is something that we have completely configured. We'll go and give company code as RH01, press enter. Here, yesterday we created this one, right? So maybe we'll give it name as #2. This is our like second plot, we can say. Just press enter. The account determination is copied this. If we double click on it, I think it will just take us to GL accounts. Okay. So this account under this account determination, we have assigned GL accounts for this asset. Then we don't have these details yet. So we'll directly go into the depreciation area tab. And here we have to assign now our depreciation key, right? So if we assign our depreciation key, system will consider depreciation values. Then we have to maintain the remaining like useful life. This is mandatory required field. So we'll say 10 years of the useful life is this. But even though 10 years is useful life, system will just keep calculating depreciation as per the percentage we have stated in our depreciation key. Now this ordinary depreciation start date will appear automatically when we will buy some asset or buy some value into this asset. Right now it is just a master asset master we are creating. Right, we are not buying anything of any value. So this is just our master data. We will now save this. Right. So now our one asset is created in the system, and we can display this asset by going into change or display asset. And just see this is our asset, right? Independent data, depreciation area is this, right? So this asset is now created in our system. Now what we will do, we will buy some asset of this land that we have configured, right? What we'll do, we will just now do the asset acquisition. So to do asset acquisition, in the fixed asset folder, we have one separate folder called posting. So all the postings that we want to do on asset, we can do through here. And here we have one folder called acquisition. In acquisition, we will say external acquisition because of course we are buying from outside. And then we will say acquired from vendor. Okay. So we'll just double click on this entry. Now on what date we bought our asset, we have to just enter. So here we are just passing out one journal entry. So the screen is also similar, right? So RH01 is our company code. Posting the 31 is for the vendors. So when we will click F4 here, we will see the list of vendors. So let's say we are buying our asset from this Royal Furnitures. Right, we'll just press enter. KR requires a mandatory field in text. So we'll say acquisition of asset. Also requires entry in reference 101 test. Right. In the next screen, like what is the value of this asset? We'll say 10,000. Then the second line, we want to buy the asset. Okay. So what is accounting entry? Like let's first write down one accounting entry. So we are buying it from vendor, asset is coming in, right? So what will happen? Land account debit to vendor account, right? To vendor account for 10,000. Right. So this is the entry we are forming. So right now we have entered the vendor account credit, right? We have entered the posting key 31. Posting key 31 is the credit for vendor, right? We have entered the vendor account credit for 10,000. Now we have to do this asset account debit for 10,000, right? So we have to select the posting key for asset. For asset debit, what we can do, we can click F4, and the second column is saying us the account type. So C means customers. So we don't want customer key. Even vendors key also we don't want. 31 key we entered, which was vendor credit, right? Vendor credit is done. Now we want to do asset debit, right? So A is stand for asset, right? So now asset debit is 70 posting key and asset credit is 75. So now we want to do asset debit. So we'll select 70. Now when we will click F4 here, system will show us the list of asset in our company, right? So we have two assets, right? One is this and another one is this. We'll select the second one because our depreciation key is in second one, right? We enter the second asset. Now in asset accounting, there are one concept called transaction types. Okay, asset transaction types. So whatever things you are doing in asset, will each activity will have a transaction type. Okay, in asset you can do you can acquire asset, retire asset, transfer asset, uh, or like scrap the asset. Okay, these 4 5 things you can do, right? You can acquire, you can retire, you can transfer, right? You can scrap. So these separate things, these separate processes, each process will have a separate transaction types assigned in the system. So we need to enter these transaction types. On these transaction types only asset accounting reporting will happen. Okay, so for acquire asset, we have a transaction type 100. For retire, we have 200. Similarly, for transfer, we have something called 300, right? So right now we are acquiring the asset. So we will select the transaction type 100 here and we will press enter. Okay. Right here we can see like depreciation key has to be assigned to each asset master separately. Like each asset master, we can assign different depreciation key, whatever you want. Then asset related transactions are controlled by transaction types, which just we enter like this 100 for asset acquisition, 200 for retirement. And transaction types are used to generate various report. Okay, based on this transaction type only, system comes to know that we want to acquire asset, we are doing acquisition of asset, or we are doing retirement of asset, right? So we have to enter these transaction types. Why it is taking so much time? Okay, we can go again to post another transaction. Let that screen run. Fix asset, posting, acquisition. Okay, these two fields are mandatory. The system is asking to enter transaction type. Without transaction type, it is not going ahead. So okay, here we went to next screen. So we enter the asset. We'll say the amount is same 10,000. And then we will click on this display document overview. Right here we can see the credit is like Royal Furniture is getting credited and the debit, this asset is getting debited. Okay, so here we just enter the asset number, right? We know where enter the GL account number, right? But system will automatically pick the GL account number which we have assigned in our account determination. Okay, so what we'll do, we'll just save this transaction here. And we'll just display this document which we just posted. It does not exist in Ledger. Yep, 03. Okay, so here we can see What we did is like we credited the vendor and we debited the asset. And when we debited the asset, we just enter the asset number, right? But system has automatically take this GL account 10006, right? If we check what is the GL account, it should be for our land. Let's see. This is our land GL account, and this is something which we have assigned to our account determination. Okay. So if we go into account determination, account determination 1000, we have created and assigned it into our asset class, right? If we go into our this account determination and land 1000, this account determination is assigned to our asset class, and in balance sheet accounts we have given this GL account for our balance sheet APC posting, right? Acquisition posting. So the system automatically determine this account, automatically posted value in this account, this GL account. If we run the report for this GL account now, system will automatically show the balance in that GL account. We go to FS10N. FS10N is like display balances report. And if you enter that GL account and if we execute it, it will show us the balance. Now this GL account is assigned to our asset class RH01L, right? Under that asset class, if we create 10,000 asset or 5,000 asset or even 100 assets, all those asset balances will get posted into this same GL account, right? And it will start reflecting here, and the GL account we will use in balance sheet and everywhere, right? So this is part of like GL and asset integration. But apart from this, now back to our asset accounting. So we have procured this asset. Now, if there is one like very important report of asset accounting where we can see the entire details of asset, any asset, which we will just see, which is called as Asset Explorer, AW01N, right? If we execute this report, we will see the entire transaction details of any particular asset, right? So we'll just execute the transaction. And here we have to enter our company code and our asset number, right? So like at the like newly it might feel confusing, but this report is actually very useful. Where in the middle you can say the first tab is planned values. Okay, it will show you all the planned values. Okay, first it will show you the acquisition value. Okay, so what is our acquisition value is 10,000. Okay, so 10,000 is our acquisition value. This is what cost we bought our asset. Then it will show you the planned depreciation for the year 2023. Okay, this data we are saying is for 2023. So 750 rupees of depreciation is planned for this year to be posted. So how this is planned or what is the calculation, we will see in some time. And once that depreciation is posted, our net book value will remain as 9,250, right? So this is the planned values. Right now, actual value or posted value is just this 10,000. Then on the below part of the screen, you will see all the transaction posted on this asset. So on this asset, right now, one acquisition is posted, which is of 10,000 rupees as on 24 April. So similarly, if you add more 5,000 to this asset, it will start showing below. And it will also start reflecting in your acquisition cost and net book value and everywhere, right? So the first tab is called planned cost or planned value tab. Then second tab is a posted values tab. It will show you all the posted values and it will also show you the calculation of depreciation period wise. So we'll go into the posted values tab. And here we can see in posted values, nothing we can see, and our net book value is 10,000 only, right? Because as of now, nothing is posted. And then on the below hand screen, you can see how the calculation of depreciation is done, right? So we bought this asset in the fourth period, 24th of April. So it is started calculating depreciation from the fourth period onwards. Okay, this is the depreciation value, planned depreciation value, depreciation to be posted, ordinary depreciation to be posted. And since our thing was like prorated period, so even it was 24th April, it is considering the entire April month, right? You can see the same value which is in May month it is posting in the April month, right? So it means it is considering the entire April month to be posted. So considering these totals, it is like first 3 months are skipped, which that's why 250 rupees we are not able to see. Only 750 rupees is posting on the first year of on this asset, right? So this is this is just a planned value. How it will actually get posted and all that stuff we will see later. But This is how the depreciation is calculated. And if you total this out, it is going to be a 10% as per our mentioned rate in the depreciation key, right? Then you have this another tab called comparison, where you can compare the depreciation of each year, right? You can see first year it is posting 750, second year 1000, and last year in 2020 2033 it will post 250, and then asset balance will become zero, right? So this is how the depreciation is supposed to be posted each year. In parameters, you will just see the details of some of your asset, like what is the depreciation key, or what is the depreciation start date. See, it has taken start date as 0104. What is useful life and what is expired. Like as and when we will go in next year, it will start showing 1 year is expired. Now remaining is 9 only. Like that, it will show all these details. So this one report or this one screen is actually very important. You can just spend some time in analyzing the screen and how it works and how it is changing and all. You can try posting multiple, you can try acquiring more and more on the same asset with the different dates, right? You just have to go into same transaction and just give the date and acquire the asset, right? The same way we did it for one, right? So this is what I have planned. I will just stop the recording.